Yo, 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 yo. What's up, guys? Let's get right into this, as always. There is so much that has happened in the last few weeks, as everybody knows. A lot. Just a lot of has happened, a lot of different algo triggers, news feeds, price targets, glitch trades, news, macro fundamentals. Like a lot of shit has happened. We open in 20 minutes. I really don't want to go through every little thing because it's still unknown where we go right here off this. I have my beliefs as to where we should go. But as of right now, we still don't know if this is like an A, B, C, D, E, where we would break the low and we would hit that. Everyone's crying and begging for this 350, 340, 350, or the top of COVID. I don't think we get there. The glitch trade from January should mark the bottom for the year. I really don't want to see it. I really want this to be an inverted head and shoulders, which puts us at 480 when it plays out. Or if it's still a right shoulder. So we're literally flirting with it, and it's getting very, and that's what right shoulder is supposed to look and feel like. We're now getting higher highs, higher lows. So you're getting a big compression here. A lot of people are saying we're gonna go up today on the Fed. Everyone in the world is hedged, so it would be less likely for you to go lower, but I just don't know. I really don't know how we go right now. And I usually make videos on Fed weeks because they're always inflection points. I've learned. I always making videos around the Fed because that's usually where it's going to go up or down. So when we made the video up here, we said we'd go down to 400 or 390-ish. We didn't know how the path it took, and my God, look at this path. It's disgusting. So we hit 390. And we wanted to see it go up. We wanted this to roll over into the Fed meeting and then make that violent drop that we talked about. We wanted to come down, come up and round out, and then have this super violent drop that may or may not break this low. And it broke it. And I thought this would last longer to go into the Fed. So we missed that move. But as of right now, this looks like it is trying to bottom. This looks like it could be a blow off bottom. You have this break of the trend here, overextended on CPI, and then popped, right? Then you have this overextension here, and then popped, question mark, right? So you're reversing a downtrend with still a ton of negative momentum. And so you get these overextensions. I don't know how this plays out. I think that October can have a volatility event because of the quarterly lower wick, right? So if this is here, how low does the lower wick? Where do we close in September? And then where does the lower wick go? You're not going to get out of it. You're not just going to have the open and then go straight up. So you got to have a lower wick. So where do we close September? And then where does the lower wick go? That lower wick should be like a rock. It should look like an anvil. Us going higher, goes up super hard into it, drops, compresses huge here, compresses huge here. So we're looking for a compression or something going into the end of September. I want to see September close flat, 393-ish. So let's hope we can get there. And I'm looking for a volatility event before the CPI. And I want to see us rip higher on the CPI in October. So it depends on where we drop and when we drop. More specifically when we drop. If we drop violently and get that lower wick before October 12th, I think it is, I'm looking for us to rip higher. If we're not dropping, or we want to see something like this. So we're looking at the symmetry the whole year, okay? This move here, this was no man's land, priced in this little, right? This move here on the neutral print, this is pricing in a big move higher. It's not part of the wave structure. It's a breakout to the upside. Into failure. This was a break to the downside from here. It shouldn't have done this because it based at 420, and so it overextends lower. This was the resistance, and then it breaks higher, and then it fails instantly, right? So this is pricing in something higher. It's just about when and how it looks and all that stuff. The most important thing that we know of, the VIX got activated. So the VIX got activated on August 29th right here, and then the next day you got a neutral print. And so this may be triggered bullishly, but we literally said here, we want to see an algo trigger the end of August or the first half of September. And we literally got it August 29th. What that does is that as the VIX goes lower, it has a bullish trigger so that it is a bullish wave consolidating lower. And that is how the VIX creates crashes, but it has to fail. If it fails, then it is actually bullish consolidation as it goes lower. People wouldn't realize that. And that's how the flash crashes, black swan events happen. So it got triggered. We just don't want to trigger it and then it go whoop. We don't want that. If it did, I would expect it. I mean, I have an alarm at 30. I just don't see us getting out of this move without some sort of volatility event. The most important thing that we saw was the glitch trade on the Russell. Okay, this happened. The last time that happened was right here. The day after this was the CPI in June 10th, and then a glitch trade 6% higher, 5.5% higher, and we went straight down like a rock. 10%, right? But now we glitch trade exactly the same price. Exactly the same price to the upside. Ow, that was loud. I'm sorry. So it glitched trade exactly to the upside at the exact same price. That should be less probable to the downside, more probable to the upside. It's very much more probable for it to do the opposite of this rather than the exact part of it. And you're crashing into previous support. This was a massive wave structure here. Massive update here. It was like 9-to-1 to the upside. Massive impulse wave. And then it did this little whoop. So this is a huge inflection wave right here. The top off of that. And what did we do? We just double bounced off of it. Crash once, and then you do this. And then crash again. Boom. Crash once. We do this straight in a straight line. So it hits something, but then it needs to settle. Clicks. Boom. And then what did we do since then? We went down, we hit that, and now we're going up, question mark. So it's possible that we do rip here. This is what I would love to see. What I would love to see, okay, this is 6% higher, 6.5% higher, and it goes back up to here. So the S&P would go up to somewhere around 410. Let's just say 405 to 415, okay? When that happens, don't know. When that happens, don't know. I don't know the end of September, early October. I don't know how that looks like, okay? What I would love to see, this is what I want to see, okay? This is what I want to see. I want to see us go up on the Fed day into here and then have a rounded rollover effect that doesn't break the bottom in early October. That doesn't break the bottom. So we go up, 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 and then we roll over and then we gap up. I want to see the opposite of this, okay? So you have a blow-off move to the downside, and it goes straight up into a gap up above resistance, and then it rolls over, and then you get this weird effect, this J, boom, okay? And the whole way down, it had huge spikes to the upside, okay? Came like this, and then boom. This would be the CPI to the upside. It's very, very symmetrical what this year is doing, and this is why we use this as a template. And so if you have this blow off move to the upside here, what do? Blow off move to the upside. We go straight down into a gap down through support, through resistance, through support, through resistance, right? You get it? You understand? So you're blowing off through support. And then what you'd want to see is it holds very, very, very choppily. But we hold, and if it goes up into this glitch trade, wherever the Russell goes, wherever the SPY is when it hits it, and then we roll over and it starts doing this rollover and starts going down into the CPI, I want to see us explode on the CPI, and that's it. We'd get the lower wick on the CPI on the fourth quarter, and then explode higher. The worst case scenario is if we break down below the 378 print. The worst case scenario is breaking down below this, because then the glitch trade gets put into effect at 364. And if that happens, you could overextend through it. This could be like a momentum bottom, and then you'd overextend. But what that does is if we broke the low, this is what it does. If we break the low and hit this, we are going up for 6 to 9 months into at least the middle of next year. I don't see that. I see it, but I really don't think that happens. I really don't think that happens. This would be a wave 1, wave 2, wave 1 of 3, 2 of 3, 3 of 3, 4 of 3, 5 of 3, So 3 is done, major wave 4, major wave 5. And then 5 would break all-time highs into next year. And we all know about the 100-year trend right here, so that we would hit 5,200 into the middle of next year, 5,100, something like that. And then this would be wave 1. This would be like one wave, wave 5, and then you get a major correction, which would be the recession. That would be the recession. People keep talking about recession this year. It's not going to happen. They're force feeding you into trying to force feed a recession. It's not happening. So that's one wave. If we break down in the next 1 month or so, then and we hit this, we're going up into here. And so it's the worst case scenario because everything will move higher. You'll make money, but it's not going to be a big move. And you're going to have to wait at least 9 months before any sort of big volatility event where you make a lot of money. I personally want to see this. We double tap that. This gets absolutely obliterated. And then we go up into the end of go up before the recession. Whether this breaks that high or not, I don't know. But that's what I want to see. This is what it's set up for. The volatility event, that UVXY still has the glitch trade down at 4.34. So how does this get fixed out? If this goes down to 4.34, the market can't go that much higher. If this hits this, something needs to happen. Can it go here and then it starts to like flatten out and take months to play out or something? Yes, it could do that, which is what happens if this goes up to here and we get that volatility event. Like we have 13.7 on UV and then the weekly middle Bollinger. This right here should be a massive rejection. You'd be retesting all of this and hitting that. So again, the next 3 weeks, if that happens. If it doesn't happen and we just rally out, that's what you're expecting. I'm expecting a very symmetrical from Q1, Q2 going into this Q3, Q4. Also, the memes, I believe, are about to activate. Okay, this is very important. This is very important because September 30th of last year on AMC, on all the memes, they had the most violent spike I've ever seen in the memes. Okay, talk about violency. Okay, touches the zero line, but with the bearish bias. Okay, so it was a downtrend, but the uptrend was stabilizing. The most violent kind of move. It went up 20% in like 15 minutes. 25% in like 15, 20 minutes. It was insane how it moved. And that's a stabilizer for the downtrend. So it stabilizes up, allows it to drop. I think you're going to get the opposite. We've been getting a lot of opposite movement. Let's see, August 23rd to September 13th. August 22nd to September 8th. It's like a very opposite effect that we're having. And also, the GameStop documentary on Netflix comes out next week, September 28th. So it comes out literally 2 days before the potential opposite move from the year before that it would trigger some move like that. It makes a lot of sense. It makes a lot of sense. And other memes and penny stocks are activating this last week. For no reason. They're just like they just exploded up like 100%, 50%, 200%. And so they're showing their face of what's going on. I just don't know this exact path. It's just so choppy. There's so many different things that can play out. Whichever way it moves will determine the size and scope of the future moves. It just looks like this option candle wants a lower wick. It just looks like it wants that lower wick and to go up. Like it just does. This would have to engulf this for this to be Gucci. So we'll see. Maybe retest this. That would be pretty good, actually. That would actually be pretty good. We got rejected here. And then the Russell glitch trade, we go back up again. And then we get rejected. And we roll over like this. And then you need something to trigger it through it, which would be the CPI. So then you go down to 400 or some shit. You go below it on the October move, and then like you gap above it, something like that. And the move is going to be fucking huge. Huge. People don't understand. Huge. Stop thinking crash. Stop thinking down. Just stop. Just stop. Not recession. No big crash. No minor D 20% correction in the next month. No Michael Burry, I told you so. It's going to happen. It's not going to happen. Okay. You will never have people call it crash before the crash actually happens. 10% drop. Sure. 10% drop, especially in this environment. I'm talking about like a crash that scars the market. Okay. We've literally been flat for 4 months. Okay. This is not what people think it is. Okay, we're retesting weekly zero line here. So this basically will show you. So what you could do is you get a spike on it and then it rolls over through it and it's like an air pocket and then it needs to activate. So there's just so many different things that could happen here. It's not really much help, but it kind of is. You're just looking for, also this is very ugly. This kickback is a very, very ugly move. Pricing in future volatility, 3.7, that is not part of the bullish wave structure. So I would expect that to get hit somewhere, whether it's here or in 2020, early 2023 on the flash crash, whichever way it plays out. Yeah, I just don't know. I just don't know. I mean, if we just roll over, then we turn into an E wave, and we roll over, we turn into an E wave, and then we start looking at 355, 350, 355. There's a ton of support here, 350 to 355, which just makes so much, it's so dumb because you drop like 8%. That's not going to spike the VIX. That's not going to make everything go nutty. You'll be retesting the top of that. Like, it just makes so much sense. Look at this. The top of this was a glitch trade. This was a glitch trade. It didn't actually go here that week, right? We crashed into it and bounced. We crashed through it and bounced. And now we're right back at top of it again. We actually didn't touch it yet. But it's like you're testing the top of 2020, grinding through it. And so you're trying to go lower, but you can't. And so what you end up doing is you grind through it, you fail, so you go higher, and then you break it at a future date. So how high do you go? All-time highs. All-time highs is the trigger. The hitting of this trend. That's the trigger. There's no way. Yes, if inflation comes down, and it comes down quickly, the PE ratios of stocks dramatically improve. They dramatically improve. And everyone keeps saying that earnings need to come down and the prices need to come down. If inflation comes down, which is nobody's putting that into the equation, if inflation comes down, these PEs improve drastically and no one is banking on that. And so this is what leads the rally. So it has to, the CPI has to come in. Also, one last thing, the November print, I have a feeling November 3rd meeting is going to be a major volatility event. We've been doing, again, very opposite moves of 2020 and 2021, like very accurately. It's freakish. November 3rd, what did we get? The vaccine. Boom. Huge move higher. Huge move higher. I have a feeling if we start, I just have a feeling November 3rd, if we break out, especially if we break out of this, if we break out of this area by November 3rd, I could see a massive volatility spike and I know we might even get the flash crash that I'm expecting, that we might even get something like that. And then we would rally out into 2023 until we touch that in the middle of the year. That's possible. They might like maybe go 100 and then they stop, some shit like that. I don't know what, but it's the opposite of the vaccine, which was a massive spike higher. A massive spike higher, which would be a massive drop lower. So that's another thing just to keep in mind. If we rally out above this by November 3rd and things are triggered and look whatever, then yeah, I would be getting very nervous and take precautions as necessary. Yeah, we're just in it. We're in it. We're in it. This is a big day, very, very big day. E wave or right shoulder. The 100 day. The 20 crossed the 100 here, and it was an exact top. The 20 crossed the 100 here to the downside, should be an exact bottom. That if that confirms today, that is a very good trigger because it broke down here, and this is where the VIX algo got triggered this year, February 4th. So right there, it gets triggered, tries to retest it, fails, finally breaks it, retests, and then it rejects it. So this would be a very big trigger. So yeah, there's just so many different things, bullish and bearish. Hold on to your hat, hedge for October, and we get through it. We would have a massive rally. Depends on how we set up into October CPI. And the memes, I think, are going to absolutely go nuts in Q4 into Q1. And that's that. GG's. Have fun. Good luck out there. And good luck today. Oh my god, that pre-market will probably get hit. Oh my god. Yesterday I was like, this just looks like it wants to get hit. And we were up here. I was like, of course we drop literally straight like a rock at 12 o'clock every day. 12 o'clock we drop. What? Every day. All right, guys. Peace out. Peace, peace, peace.